And just to dig into that report from the information, Meta is in discussions to use Google chips known as Tensor Processing Units, or TPUs, in their data centers in 2027. Meta may also rent chips from Google's cloud division as early as next year. Now, look, while NVIDIA's GPUs remain the leading product in terms of training and deploying AI, Google's TPUs are specially designed for the workloads they're supposed to handle. They're very specific. Experts say this gives Google an advantage as it can offer customers more highly efficient product for running AI. And now, while these TPUs were initially designed for Google's internal use on the cloud, the tech giant has been keen to build a business around it. For example, this year, Google struck a deal with OpenAI rival Anthropic to supply up to 1 million of these TPUs. For Google, it's a validation of its technology and gives it a chance to rack up more customers for its cloud business. For NVIDIA, while it's unlikely to dislodge NVIDIA's dominance in the near term, the Google Meta deal highlights the growing competition in the AI chip space and, of course, gives another option, Frank, as these massive data centers continue to get built out. The market reaction is really fascinating this morning in the pre-market. You're looking at AMD and NVIDIA both lower in trade, Alphabet higher on the news. But interestingly, Broadcom, this is a stock that's higher as well this morning in pre-market trade. Broadcom actually helps design and manufacture some of these Google TPUs. And so that's getting a bit higher this morning, Frank.
Yeah, you're talking about the market action. Now, Alphabet hitting a record high yesterday, up over 6% yesterday, up about 3% in the pre-market. So if those gains hold, up over 9% just since the open yesterday. So big upside move. Here's a question for you, Arjun. Why are we seeing NVIDIA move lower? I thought one of the big stories here is that NVIDIA was capacity constrained and that there was a market for many more chips than they could even produce. Why would gains by Alphabet lead to declines by NVIDIA, at least when it comes to the stock price?
Absolutely great question, Frank. It's the jitters. It's the AI jitters. All this bubble talk, all the debate of we're in an AI bubble. I think the market is so sensitive right now to any news around semiconductors, chips, and artificial intelligence. Any kind of news that may suggest NVIDIA could face more competition and maybe that outlook isn't as strong, that is something that could move the stock. So that's what you're seeing here at this point in time. Look, just reading it here, Google's TPUs, or tensor processing units, are very specifically designed for certain AI processes. They were initially designed for Google's own cloud, on training AI workloads, on the inferencing space. What you see with NVIDIA right now is its GPUs still remain so popular. They remain fully entrenched in these big AI data center buildouts. And remember, for NVIDIA, it's not just about the hardware. It's also this CUDA software that many people speak about that helps developers build applications on top of NVIDIA, and that helps it keep a very entrenched position. So look, while in the near term, I don't think Google's TPU is going to ultimately dislodge the dominance that NVIDIA has found at this point, I think what it does do is add a little bit more competition. It adds a little bit more potential supply chain diversification. And I think a lot of investors are thinking longer term, what does this mean for NVIDIA and its position in this market? But clearly, this is the move we're seeing in NVIDIA is somewhat of, I think, a reaction to some of the jitters we're seeing more broadly around this AI trade, Frank.
When you think about the chip piece of it, not only are we seeing investors get excited about Google because of this potential deal with Meta, but you look at NVIDIA's stock and it's down on the back of this news. Does that make sense to you longer term?
Yeah, and from a chip perspective, I'm certainly not the expert there, but frankly, it's a gigantic market. And one of the things that Google does have from a benefit perspective, they've got the model, they've got the chip, they've got a delivery mechanism with Google Cloud, and now if they're opening up to more, it's pretty interesting. One thing that seems to be for sure here is that the demand side continues to grow. And so when you see that backlog growing as fast as it is, when you see other companies in this industry growing as fast as they are, whether that be being chips or via the cloud perspective, and also Amazon in there as well, there's a huge opportunity for that to continue. So we believe that this demand can continue here.
Stocks rising on this report by The Information, which does say that Meta is considering using Google design chips in its data centers in 2027. Jim, I thought of you and I wondered if it's too late to rename your dog.
No. Wow. Let's break this down a little. First of all, The Information does have a good story about Google. We don't know how much is their licensing, but I think that if you go to Gemini because I wanted to go to the source. And you asked who makes it, who is the vendor, so who's the vendor? Well, it's Broadcom. And who's the general contractor? Well, it's Broadcom. So I see Alphabet up, and I get that. Yesterday, Broadcom was up 10%, and Alphabet was up 6%. If you're really going to trade this, there's two ways to do it. I think, obviously, you can buy Alphabet. Everyone's going to do that. Or you can buy the company whose CEO is on the board of Meta, which is Hock Tan. And I think that Hock Tan and really, David, I think that when you look at this thing, it's Broadcom all over. It's Broadcom.
Well, I think that's a very interesting point you just raised, which is, of course, Hock Tan is on the board of Meta. And these are chips designed with the help of Broadcom.
Right.
And we've talked a lot about the TPUs of late at Google. I've been talking about them for weeks in part because of the cost differential, perhaps, that they give Alphabet in a positive way, given that they don't have to buy as many NVIDIA chips to power so much of what they're doing on the AI front. Obviously, they still have to buy some, but that can be really beneficial in terms of, again, what Satya Nadella, the CEO of Microsoft, calls the cost per token per dollar per watt.
Right.
Battle, so to speak,
well,
between the large language models and everything else.
Jensen were here, let's say Jensen were here. He would
I
say,
wish he was. Can you bring him sometime?
I'm going to
have him just join us here?
I'm going to do my best because I think what Jensen would say is, look, we have great competitors and they're terrific. And when you see the Vera Rubin, you're going to say, why would you ever buy that TPU?
Right.
Because the changes, the leapfrog, look, this Gemini has been, I don't know, I'm not on anything, but I'm on these things constantly because I'm just like, I look at him for like, what do you think about this lousy offensive coordinator of the Eagles? And he'll explain to me that, don't forget the Eagles have a great relationship. They're like, it's so damn smart. But David, Meta is the winner because Meta stock is going down endlessly on the amount of money it's going to have to spend.
Yes.
And it's going to spend much less now.
It's going to spend less than that because?
Because it's got a good deal with Alphabet Broadcom.
So you don't think that they'll hit the, what is it, $113 billion that they're scheduled to spend in CapEx next year?
Okay, you see a headline that says Meta cuts CapEx just as powerful. What are you going to do? You're going to sell Meta?
I can't imagine we'll actually see that headline.
Well, you got, consensus for hyperscaler CapEx, we're going to see a second derivative deceleration next year and the year after that.
Look, I've been a big believer that Mark Zuckerberg put out this figure in part because he wants to stop OpenAI from coming in against his social media platform because OpenAI has a great chance to go in against it. I'm going to go to David with a real challenge right now.
Uh-oh. What do you got?
Don't we have to say that everyone who's having anything that is levered to OpenAI is more questionable than it was a week ago?
Yes. I actually had a number of calls about this yesterday with people. The value and credit questions will have an impact. That is notes that I wrote here from somebody very close to OpenAI. The questions will continue.
Don't give me the shocker.
But that's yes, true. But at the same time, the spending won't stop by both the hyperscalers and the governments. Let's not forget the sovereigns who are all developing their own AI.
But you go there, that's NVIDIA, and people are selling NVIDIA like there's no tomorrow. And I got to tell you, that's a mistake.
And, well, they're selling it in part because they see Google as a possible competitor.
The information piece talks to this Google Cloud exec who thinks TPUs in general can get 10% of NVIDIA's annual revenue.
Well, look, I think that people who don't want NVIDIA chips, I think Jensen Huang would say, good. I want to fulfill everybody else. And by the way, when you went for a Rubin, which is going to have a greater total cost of ownership than you could possibly get, you know what I have to say? See you later.
You lost your place in line?
Yes. So, look, this NVIDIA, like the sellers of NVIDIA off of a story which is totally sketchy that we don't know the details of with some blind sourcing versus what Jensen would say about the next generation. I'm going next generation, Jensen.
Well, NVIDIA did respond to this other...
Now, that was complicated.
Yeah, this other story that frankly is out there, from somebody who's shorting the stock and talking about any number of things. You could pick out a lot of things in their response, which we have a copy of here. But I chose actually to focus in part on something they also referred to on the earnings call, which is simply the depreciation of a GPU.
Yes.
You talk about the next generation
and the next generation. You're just all over that.
But the fact that, and here... they're combating this idea that somehow they're related in some way to what they're doing is related to WorldCom. That's a company I actually know a good amount about, and I would agree.
I didn't want that.
There's no claims here NVIDIA has improperly capitalized operating expenses. It's kind of absurd.
You don't do that.
What caught my eye here is, and this is NVIDIA's memo, that talking about overstating earnings by extending GPU depreciation schedules beyond economic useful life. And then they go on to say, the fact is that they were longer than originally anticipated, and in many cases, for 6 years or more.
Well, if you have Michael Intrater from CoreWeave.
That's important. That's important for CoreWeave. It's important for any number of other data, for any of these companies operating in the data center, because as we point out many times, the cost of the data center is not the building of the structure.
No.
It's what you put into it.
Right.
And the main cost of what you put into it is the GPU. If you can get almost as much out of GPUs after 3, 4, 5 years, well, I don't know what it means about upgrading with NVIDIA, but it certainly means that the money may have been better spent.
Software upgrade. This is all based on CUDA. Look, I don't work for NVIDIA, and I don't write their press releases, but one of the things you never do is allude to something like a WorldCom.
By the way, this is in their own writing.
I know, because I suddenly said,
surprised
oh my God, WorldCom, I better dig in on this.
Just don't get anywhere near WorldCom or Enron in terms of writing anything. Why would you respond like that? I know, kind of weird.
It's quizzical. I'm going to put it in the quizzical category because I revere NVIDIA, and I revere Colette Kress, who's the CFO, who's taught me so much. Some people make mistakes. I've made many mistakes in my career. That was a mistake to allude to WorldCom.
But you think in general it's like in politics, if you're explaining, you're losing?
I'm a Henry Ford person, never explain, never complain. That's been my rap for since 20 years' time, which, may is a semblance time for me.
I'm sorry, what?
It's personal. But I'm saying that you don't explain, okay? You just don't do that. Because what happens is that I feel, when I read this, I said, I got to go back over this. I've never even thought of them as WorldCom. I think of them pristine. I think of them as the gold standard. This would be like a company that, I don't know. I looked at Apple's balance sheet. I don't know if you ever looked at it. It's like the most perfect thing in the world.
Well, you wrote a book about it.
Yes, because it's so great. And if they came out and said, listen, we're no WorldCom, I'd be like, oh my God!
Why would you ever say you were?
Oh my God! No WorldCom. David, go open the file.
I remember the file well. Believe me. Scott Sullivan.
David, having broken the story, I think he's very close to the idea of what a WorldCom balance sheet would look like.
I do remember that very well. It's one of those moments I'll never forget. What's that? Yeah. No. I mean, we got to even stop saying.
I know Jack Kennedy. You're no Jack Kennedy. But how about that? That says it.
So with NVIDIA at a 2-month low here, you're saying you'd put fresh money in?
Yes. Yes. I think NVIDIA has been slighted here. I think NVIDIA is a company that reported a great quarter, that could have another great quarter. It is selling an incredibly low multiple, and I'm not seeing customers run away from it. I'm seeing some customers being price sensitive. And that might be a moment where people say, well, listen, NVIDIA, therefore the price of their product is going to go down. But price goes down when there's no demand. And the demand is insatiable for NVIDIA. And I genuinely believed Jensen Huang when he says, look, every time you buy one of our chips, you make money. You talk to Colette Kress, she goes, listen, you want to make money? Buy some of our stuff. And the streets rap is they're extortionate. They're not extortionate. That's crazy. This is Jensen Huang. He's the best there is. The next generation is going to be full-scale reasoning. It might leapfrog Gemini. I got to tell you, Gemini it is frightening how good it is.
Gemini 3 is quite good.
So you think when Benioff says I'm not going back, it might be overstating it? He might go back?
Did he say that with Pam Bondi, or did he say that with Treasury Secretary Besson?
You're referring to his selfie with Bondi at the dinner.
Yeah.
Yes.
Or with Besson. Did you get that one too?
Besson, the soybean farmer.
Yeah.
Who's very good on
That's very far.
Is it,
Well, NVIDIA shares, I actually want to start with them because they're down today after the information, down almost to 6.5% after the information reported Meta is considering renting Google's Tensor processing units TPU from Google Cloud next year and could actually spend billions of dollars more to start using those same chips in their own data centers starting in 2027. That means breaking NVIDIA's stronghold on the data center chip market while you're seeing NVIDIA's sell off. And this also follows last week's Gemini 3 enthusiasm, which investors are calling the industry's latest, quote, DeepSeek moment since the large language model was trained solely on Google chips and not NVIDIA. The fallout is hitting other NVIDIA customers too. Oracle is down, we could say sharply today, almost 5%. They've bought billions of dollars of NVIDIA chips to rent out via the cloud. But if competitors build AI clouds with cheaper TPUs, those Google chips instead, Oracle can really just get undercut on price. So this is all about competition and offering the cheapest option. On the flip side, Google's hardware suppliers are climbing higher and have been climbing higher just over the last little few days. Broadcom, granted, it's flat to the negative right now, but it's been, 10% higher in the week. It partners with Google on those said TPU chips, and it's been up and down. Jim Cramer points out earlier that Broadcom CEO Hawk 10 sits on Meta's board, so Hawk 10 could help influence Meta's board to pick Google chips designed by Broadcom. It's all connected. Google hardware suppliers like Celestica and Lumentum are also climbing as investors rotate into Google names and away from OpenAI. Suppliers like Microsoft, for example, on your screen, down about 5% on the week. The real concern, though, for OpenAI is it's getting harder to distinguish which models perform better, Gemini or ChatGPT. If they become commodities, which many argue is going to be the case, the one with cheaper cost wins. And that's exactly what Google's offering does with its own TPUs, I should say.
All right, I hope you're all doing well today and staying calm in this market. As we discussed in last night's video, The Information published an article yesterday in After Hours claiming that Meta is in discussions to use Google's TPUs as soon as 2026, and also to potentially add Google TPUs to their own data centers in 2027. There's been a lot of talk online in recent months about Google preparing to offer their TPUs to customers rather than just using them for their own internal workloads at Google. And so, while I'm always hesitant to believe anything The Information reports having to do with NVIDIA-related rumors, given their track record, perhaps there is some merit to this article. Also, I'm sure many of you are aware of Google's Gemini 3, which launched recently, and that it was trained exclusively on Google TPUs rather than NVIDIA's GPUs. Jensen actually mentioned Gemini 3 on NVIDIA's recent earnings call, saying that he saw a text from Demis of Google DeepMind saying that pre-training and post-training are fully intact. Gemini took advantage of the scaling laws and received a huge jump in quality and performance. In other words, the more compute you use, the better your models become, and that is good news for NVIDIA, even though Gemini was not trained on NVIDIA hardware. I think that the selling of NVIDIA stock in light of the report from The Information is the wrong read of the situation. I view the pullback as the market reacting to a headline without fully considering the implications. Let me ask you a few questions. Is the world still compute constrained? It absolutely is. Will NVIDIA sell whatever they can produce in 2026? They most likely will. Will NVIDIA sell whatever they can produce in 2027? They most likely will. The reality is that companies today, including companies like Meta, simply cannot get enough compute. The world is severely compute constrained in the face of very strong AI demand. Let me ask you another question. Will the total addressable market grow over the next 5 years? The answer to that question is almost certainly yes. And so if the total addressable market is going to grow larger and the world continues to be compute constrained, then there's plenty of room in this market for companies like NVIDIA, AMD, Broadcom, and others to all succeed as there is such strong demand. And so again, I think selling NVIDIA on this news is the wrong read of the situation. I don't view the success of Gemini 3 or the success of Google's TPUs as a major problem for NVIDIA at this current moment. I'll briefly revisit the topic of GPUs versus custom ASICs in case someone isn't familiar with what's going on here. To give an analogy, you could think of an NVIDIA GPU as a Swiss Army knife. It's very versatile across a wide range of tasks, while at the same time, it is not the absolute best option for certain tasks. On the other hand, you could think of a custom ASIC, such as Google's TPU, like a scalpel. It's not versatile, but it is highly efficient at the specific workloads it has been optimized for. And notice that there are use cases for both. As I've said in the past, Google is a great example of a company that uses both their own custom ASICs and NVIDIA's latest systems. Even though Google uses their own TPUs for their internal workloads, they also continue to invest heavily in NVIDIA's latest systems to then offer that capacity to their cloud customers. NVIDIA systems are a great option for cloud providers because they're versatile across a wide range of tasks, allowing cloud service providers to serve a wide variety of customers. All of that to say that I don't view the success of Google's Gemini 3 or the potential for Meta to start using Google TPUs as a major deal breaker for NVIDIA. There is plenty of room in this market for multiple companies to succeed, and that will most likely be the case for some time. As I've mentioned in recent videos, I don't think that NVIDIA is overvalued here, not at all. all. I know some well-known short sellers have recently compared NVIDIA to Cisco in the dot-com bubble, but the two are very different from one another. At the height of the dot-com bubble, Cisco was trading at a triple-digit forward PE multiple. Today, NVIDIA is trading at a forward PE in the 20s. That is not egregious at all. That's basically a market multiple. And if NVIDIA's earnings turn out to be better than what analysts are expecting, which is usually the case, then that would mean NVIDIA is even cheaper than that. Given all the talk about GPUs versus TPUs over the last 24 hours, I want to simplify things so that we're not distracted by the noise. Think about this. NVIDIA's valuation moves higher as their earnings grow. And going back to the questions I asked earlier, will NVIDIA sell whatever they produce in 2026? Will they sell whatever they produce in 2027? Will the total addressable market continue growing as the world is compute constrained? The answer to all of those questions is almost certainly yes. And therefore, NVIDIA's earnings should continue growing at a strong clip. And if earnings continue growing at a strong clip and NVIDIA's valuation moves higher on their earnings growth, then the stock should continue to move higher as well. I don't know what the stock will do in the short term, and we should always be prepared for potential pullbacks. But from a long-term perspective, I seriously think that NVIDIA still has plenty of runway ahead of it. I don't think it's overvalued here. And I don't view the TPU situation as a major deal breaker for NVIDIA at all. Looking ahead, NVIDIA is set to present at the UBS Global Technology and AI Conference on December 2nd at 6:35 a.m. Pacific, 9:35 a.m. Eastern. This event will likely have an impact on how NVIDIA trades in the short term, given that the event is geared toward the financial community. I continue to think that most analysts are underestimating NVIDIA's long-term growth. Of course, I expect NVIDIA's data center business to continue growing strong as the world is compute constrained in the face of very strong AI demand. I also think that most analysts are not adequately factoring in growth from some of NVIDIA's other business segments into their long-term estimates, especially physical AI. There's a reason why I keep talking about NVIDIA's physical AI business, and NVIDIA CFO nailed it on the earnings call when she said that physical AI addresses, quote, a multi-trillion-dollar opportunity and the next leg of growth for NVIDIA. I am completely serious when I say that I think NVIDIA's physical AI business may eventually be larger than their current data center business. This is not getting enough attention, but I think it will get a lot of attention in 2026 and 2027. NVIDIA sells the hardware for the data centers where the models are trained. They offer Omniverse where the models are taught and tested. And NVIDIA also sells the hardware that allows on-device real-time inference through NVIDIA AGX, allowing robots to have intelligent interactions with the real world even when they are not connected to a data center. Notice that NVIDIA is taking a holistic platform approach to physical AI, and they're embedding themselves as the underlying foundation supporting all of it. Over 2 million developers are already building on the NVIDIA robotics stack, and this is not getting enough attention. I continue to think that most analysts' long-term NVIDIA estimates are too low given what's ahead. As for production ramps, Blackwell Ultra is ramping very quickly right now, leading to revenue growth acceleration. Rubin is on track to launch in 2026. Then we're expecting Rubin CPX at the end of 2026. Later on, we're expecting the launch of Rubin Ultra in 2027 and Feynman after that in 2028. We have a clear data center product roadmap stretching into 2028, and Jensen believes there will be $3 to $4 trillion of global AI factory buildout between now and 2030. That means Jensen is expecting growing AI demand and an expanding total addressable market underpinning all of this. I don't think we are anywhere near any type of bubble bursting type of event. With all of this in mind, I seriously think that NVIDIA still has plenty of runway ahead of it, and I think this company will be worth substantially more in future years than it is today. At least that's my view of the situation. Remember to stay calm in this market. Remember to maintain a long-term perspective, and do not make any hasty or irrational decisions. With all of that being said, I hope you all have a great rest of the day, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.